What's going on, everybody? Welcome to the new construction process webinar. Gonna let everybody get up in here really quick. Just gonna be watching the attendees here just for a couple seconds, just because I know. Look, I show up on time maybe 10% of the time, and I was only here on time because I gotta start this thing. So we're gonna let everybody hop on in real quick, um, and um, and then we'll get started. Before we get while we're waiting for everybody to roll in, let's start with a little. Where are you tuning in from? Go ahead, drop in the chat where you're from. I'm in Virginia. Go ahead, drop in the chat where you're calling it. Orlando, Tina, what's up? Orlando, and Maryland, Ayobami, Maryland. Where in Maryland? Doug's coming from Orlando, Gaithersburg. Okay, so Maryland and Florida. Y'all the one wasn't here? Well, I guess except for me. I'll go another Maryland. Siobhan, Maryland. Okay, where in Maryland are you coming from? So Gaithersburg, Orlando. Ayobami, where are you coming from? Glen Burnie, Lisbeth from Virginia. We're in Virginia. Now, are you Virginia, or Northern Virginia? Whole different story. Michelle coming from Dover, Delaware. Siobhan's from Baltimore. Pamela's North Bethesda. Oh, right around the corner. New Jersey. Rashana from Jersey. Where are you, Rashana? You're from Jersey. Where in Jersey? Terry's from Pennsylvania. Go ahead and let me know. Let me know the city you're from. So go ahead, put city, state, just like a job application. So DC, Takara, where in DC are you from? So I'm from I'm in Leesburg, so I'm right, pretty close to the border, the West Virginia border. Eloise, you in Leesburg? Come on, got a neighbor up in here. Got me hyped. We haven't even started. I'm getting hyped. Simone's from Laurel. Well, did I miss anybody? Fifi's from Rockville. Rashana, you're from Vineland. Arlington. Man, I love this representation right here. I'm not alone. Okay. Oh, Tony, you're from Denver. What's up, man? Great to have you around. Oh, so you're a whole different time zone. So this is around 4 o'clock for you. Yeah, go ahead, open up that incognito tab. Don't let nobody find you at work. Ayana's from Philly. Philly, that's where Hauser. That's where this all came from. This came from Philly. So you're right at ground zero there, Ayana. Okay, 602, 603. Okay, let's go ahead and get started. This thing is gonna be pretty fun, guys. I'm gonna cut my camera. Matter of fact, should I cut my camera off? All right, hold up. Let's go and do this. I know I'm not the prettiest guy in the world. Sonny's from Princeton. Okay, let's go. Look, I might be shooting myself in the foot here, but camera on or off. Okay, I'm just trying to decide what I want to do. Camera on or off. But today we're talking about the new construction process. This is going to be big picture. Okay, we'll talk about some of the details. We'll talk about some of the specifics of each part of the process. But mainly, this is to get you guys thinking, to put it all out, the process out in front of you guys, so that you can get started. If you know anything about new construction, if you've actually started the new construction process, put a 1 in the chat. If you're thinking about it, I know you just think about. You can put a 2 in the chat if you want. This is all optional. Okay, so if you want to let us know where you're at, where in the process, go ahead and let us know. So I'm gonna go ahead. Let me cut this camera off, and then we're gonna get started on the with the process. DeAndre, okay, you just started. Really good to know. So any questions you got, let us know. Any tidbits or insights you've gotten through the process, where you're on the process that was helpful, that you want to share, please. This is a fireside chat. We're all friends here. Go ahead and let us know. Wondering if it's better than buying what's already not new construction. Tina, great question. Let me get that. I'm gonna get to that in a second. But let me start with this. Let me start with the presentation. Right now, we're going to prepare one now so you can win later. Sounds like DeAndre already winning. We're going to make sure we're all winners. A little bit about me. My name is Moki. I'm a marketing professional here with Hauser. I'm also a realtor. I'm licensed in Virginia. Shout out to my Virginia folks out here. You know, we stay strong. I immigrated to America in 2001. My family from Kenya, and I'm a Messi fan. Look, I'm happy he's at Miami, and I love seeing him score goals. I love seeing him celebrate with his teammates. So I'm all for it. So that's who I am, and this is what I do for Newfound. And you're probably wondering, what the heck is Newfound? You probably came here from a Hauser link or a Trailora link. You're like, what the heck is Newfound? Think of it this way. You got ESPN, right? Who owns ESPN? Disney, right? Or you think about, let's say, Powerade, Pepsi, Sprite. Powerade, Coke, Sprite. These are all brands that are owned by Coca-Cola. So Newfound is the parent company for Hauser and for Trailora and the plethora of brands you see down here at the bottom. And that's who we are. And we're here to help you figure out the next best steps to keep the home buying, the real estate home selling dream alive. So let's get to this thing. So why Newfound, right? We are not like every traditional brokerage. I'm biased, obviously, because I work for his place. But at the same time, I've also seen it with my own eyes. I just completed a very big dollar new construction project that required a lower than 6%, 5% total commission base, that where my buyer was able to get the equity from his home to put a down payment on a new construction home. So we save sellers up to 50% on their commissions, on the commissions when they sell their homes. And this is especially important with new construction, because I'll get down to it down the line, but in new construction, you can't just, you got to bring a little bit more to the table. So this helps you be able to do that. We offer a listing fee of just 1%. And then you, as a seller, get to choose how much commission you want to put to the buyer. I just had a conversation with a past client of ours out in California. He sold his home and he had a buyer commission of 1.5%. So grand total, he ended up 2.5%, which is over 50% savings on commission. So that's who we are. We also have everything in-house. We have a transaction team. So you know that whatever time of day or night, somebody's got your back. All right, done with that. Let's get to the good stuff. So let's talk about what are some of the reasons, if you haven't started the process, if you thought about the process before and it's maybe got you a little apprehensive, what makes you not want to buy a new construction? Got this poll going. Go ahead, answer. Hey, we're all friends here. There's no shame. Whatever you're experiencing, I guarantee you somebody else is doing so. So go ahead and let me know. Is it because of the fear of commitment? What if you lose your job? What if you move? It's a large upfront expense. Maybe you need to having to wait for 6 months or 5 months or 2 months even is just makes you uncomfortable, or is it just the process feels like it's so big, there's so many moving parts that you don't know, you don't know what you're gonna do. Or it's the expense. It's not cheap. New construction is it's always at the top of the range of whatever kind of house you're looking at. So it's true. And not only new construction, man, anything, even resale. Let's say resale, you want to buy a home that's 300,000. Let's be real. If you compete with 3 or 4 of the buyers, you're going to end up at 375. So wherever you go, it's a big expense, and it seems like the big expense is what really affects a lot of you guys. And you know what? I'm really thankful for you guys sharing. And like I said, whatever you're feeling, you're not the only one. So recognize that the expense is real. I mean, home prices have gone up 20% year over year for 2 straight years. Overall price, homes are expensive, and new construction is no different, but there are ways that you can finesse this thing, and it can work out for you really well if you just put the 2 and 2 together. Okay, so we got the large upfront expense is the thing, and then followed by the timeline. Yeah, it takes a while. It can take up to 12 months, to be honest, to get this thing. But it can take also as short as 2 months, depending on the kind of home you get. What you want. It can be super long, super short. And the process, I think the new construction it's a bit of an illusion, because it seems like a daunting process, but really a lot of the time you're just waiting. A lot of time after you go to your design center, you pick everything. At that point, you're just waiting for the stuff to be built. You get check-ins from your site manager, and from then on, you're just chilling, waiting for the loan to clear, so you can figure out what you need for your closing disclosure. So it's a lot of waiting, really, more than anything. Okay, all right. So let's go ahead and close this one. Now I want to get to the fun stuff, the happy stuff. You know what I mean? Why would you? Why? What brings you here today? What brings you here saying, "Hey, Moki, I need to get this new construction. I know all the stuff that holds me back, but if think about it this way, if you were to be able to whatever's holding you back, clear that mess out the way. Why are you here? What's gonna make you buy a brand spanking new, fresh out the oven with the steam coming out, brand new home? No one's ever lived in it. You're the number one. Go ahead and let me know. Oh, be the first owner. Everything is. Oh my gosh. Let me tell you. I'm gonna tell you something, guys. I don't think I haven't told very many people about this, but the smell of a new home on move-in day, doing our final walkthrough before anybody steps in. No one's ever owned this home. You're the first one. Oh, look, now granted, there's no furniture. Granted, there ain't no cutlery. But man, that new smell, the lights, the fresh paint, the fresh carpet, the now your lawn they're still aerate, they're still setting that thing in, so you got a water bed outside. Other than that, to know that you made it 10 months, 12 months, and you got a brand new home, oh my god, so can't compare. I really hope you guys get to experience that, because there's no other feeling. Okay, so yeah, brand new everything is great. And you know what? This is what a lot of people really gravitate towards new construction with, especially because home prices have gone up so high, right? So a lot of people will be like, why am I going to bid and compete with like 30 people for a home that's 20 years old? It's had 17 owners. The carpet's all jacked up, paint's all over the place, and your neighbor is, you know what I mean? He's a little too close for comfort. Why you gonna spend all your money for that? So a lot of people will say, hey, you know what? It's expensive, but I'm going to be paying a whole bunch anyway. So let me go ahead and get this brand new. All right, good, great. I love it. I love it. I love it. And builder financing. Hey, let me tell you, there's no place like new construction where you can get some of this money, a whole bunch of money in your pocket real quick. Ain't nothing like new construction. Okay, great. Brand new owners. We want to be brand new owners. We want to own it all. We want it brand spanking new with the tags. Okay, very, very good. Now, let's get to the state of the market. Home prices are high. How did we get here, right? Obviously, we had COVID. Now, this is the thing that I think we got to realize. Nobody expected this to happen. Nobody expected to see 20% year over year the way that it happened. Nobody expected it. Everybody was caught off guard. The United States government printed $3 trillion. I'll tell you something. If you got to print $3 trillion, you got a problem. Okay? You have a big problem. Michelle, none apply? Hold up. Michelle, I'm going to keep talking. Go ahead and tell me what you mean by that. Sorry I saw this so late, but we had a problem. Okay? Home prices just got away from us. And what happened then was, everything got away from us, right? You got cargo ships that are stuck in San Francisco, can't get off the boat, can't get off the ship. So you have now labor concerns, and so the U.S. So we got to do something, right? So what do? Before that happened, you have interest rates that are flat, right? The whole problem is because we got to keep the economy going. So take out the interest rates, keep people spending, give them tax credits, give them the Biden bucks, Trump bucks. Everybody can keep spending, right? Then you get home prices going crazy out the wazoo, and a lot of it too, it had to do with just pandemic, just wanting to be a part of it, right? How cool would it be to tell your friends that you bid and won and beat out like 30 offers and got a house, right? Like that's some social currency. One of my cousins, he beat out 53 offers in the North Shore of Boston. So that's cool. You got a story to tell your kids, right? So home prices got crazy. Interest rates are super low, and not only for for new buyers, but homeowners also refinance like crazy, so that the amount of equity in the country right now is, I think, somewhere around $5 or $8 trillion of home equity inside these homes. So homes are sitting with a lot of equity, right? And also, what happens is, because of that, and because a lot of these people haven't owned their homes for so long, inventory was low. But when the federal government started increasing the Fed's fund rate, which also increased the mortgage rates as well, they wanted to slow the market down, and it slowed down. But what happened was 90 around 90% of homeowners right now have a mortgage that's under 5%. What that means is that their monthly housing burden, or their monthly debt, let's say debt to income ratio, is from housing is about 20 something percent. That's for the people that have more current mortgages. If you want to buy a home right now, at the top of the market rate, you're going to be looking at a housing burden of about 36% of your debt to income ratio. So all these folks out here, if you got 20%, if your money's working for you, why are you going to sell your house in? So it's called the golden handcuffs situation, where a lot of folks, they would love to sell their home. They would love, but they don't. But why? They can't afford. It's not even that they can't afford a home. They can't afford a better one. So you have inventory that's kind of locked in right now. So even though the market is slowing down, even though home prices, the rising home prices are slowing down, it's still because most people have so much money in their houses. They have their interest rates are so low, and also um, haven't owned their home for very long. A lot of these folks, have owned their homes for less than 5 years, and most people think about selling their homes at around year 6, year 7. So a lot of folks are just still kind of just adjusting to being homeowners, right? So right now, so it's making a bit of a really it's a bit of a gridlock, and we're trying to figure out what's gonna break that. And also, and another thing too, with the equity, the rate of foreclosures is very low. So whatever we're going to see in 20, whatever we saw in 2009, 2010, 2011, 2012, it ain't gonna happen. It ain't gonna happen. It ain't gonna happen that fast. It ain't gonna happen that soon. And it's just not gonna happen when we want it to happen. So we have very few distressed homes, very few resales. So the question is, what's going on with new construction? So new construction, what we're seeing in new construction is there's just less competition. Now, the thing you got to recognize is that there's no competition, but there's a wait list, right? And before, if you guys don't hear anything else I'll say until from before I start until the end of this, get on a wait list. If there's a community that you see, that they've already sold whatever inventory they have for that release, and there's another one, just get on the wait list. People go in and out of the wait list all the time, and you'd much rather be on the wait list and climb up than get on it and leave and then have to come in at the very bottom. So get on that wait list. It could work out for you. So supply chain issues are not as stringent as before. So construction is moving forward. Homes are being built. They are being completed on time, relatively on time, with one delay or two delays. A whole lot better than having 5 or 6 or 7, 9 delays and having been delayed 3 or 4 months. So that's not happening anymore. Homes are closing on time. But one of the things you got to recognize is that not just right now, but over the last since around the crash in 2008, home builders have been underbuilding year over year ever since 2008. One, a whole lot of them went out of business anyway. So there's not that they're not that many builders as before. And they're also underbuilding because they don't want to have the same situation where you had homes, flying off the shelf like hotcakes. So that's happening. At the same time, all these babies that was born in 1989, holla at your boy, 1990s, all these younger millennials are now coming into home ownership age. So you have underbuilding going, home building going down year over year, but then households going up, 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 up. The pandemic came at the perfect time when you have a whole bunch of people that need to buy a home and a whole bunch of homes that ain't happening. That's part of what created this crazy situation, the perfect storm of just what seemed to be a complete disaster, but except for sellers because they were laughing all the way to the bank. But new construction, you have builders that are eager to fill communities. Not only so you have all that situation, but what happened right around the end of last year, coming into 2023, builders started giving away everything. I mean, you could ask them to take out your trash for the first month, and they'll probably do it, or at least they'll think about it, right? Rising interest rates. A lot of builders. What happened, especially at the beginning of this year, Q1, Q2, you had a lot of homes under construction and very few homes closing. Builders had a bunch of inventory that they needed to get off of their hands, off of their books, and buyers just weren't biting because of the interest rates. So what the feds wanted, what the feds, what the Fed wanted to happen on resale was happening in new construction. But the thing about new construction is that they got the money. They got the money to reel everybody back in and get them moving. So builders are eager to fill communities, and they want you in the home. Pause, rewind. They want to sell the house, and they'll give you a lot of opportunities to buy the home by offering incentives for you to just get in, get a crazy deal, and close on the home. So the home buying, I think a couple people talked about the process being long. To be honest, the home buying process for new construction is basically the same as the one for resale. It's just the time that the time and the construction that are different. So you've got your guidance. You want to get a professional. Look, I'm a realtor, and you're gonna say, Moki, you would say get a realtor. Yeah, okay, you know what? Yeah, I'll say get a realtor. Why? Because builders will really sales reps, their job is to get you to sign that contract because it's going to benefit the builder because they have one less home they got to worry about selling. So they'll listen to you, but they're not going to advocate for your concerns. Let's say you go to a sales rep, sales rep, I da 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 da. They're not going to be like, oh man, I hear you. Let me, I got your back. You ain't going to hear that. You're just going to hear, you going to sign or not. So you want to get a realtor because we can help advocate for you, and check somebody if it needs to happen. Had a buyer wanted to buy a home, and they, for some reason, they needed like $5,000. Like literally, they had pen in hand. Wait a minute, I need like $5,000, and I was like, hey, look, can you do it? What's the worst I got? It's just $5,000. I think the home was like 900,000. I was like, look, it's just $5,000. Come on, hook them up. And literally, right when they signed, they got an additional credit of $5,000, literally out of thin air. So I'm not saying it's going to happen all the time. I'm just saying, you want somebody who can get your back, so you don't have to try and fight for yourself all the time. And then you got your finances. You got to get pre-qualified. You got to get your, you got to apply for the loan. You got to give your deposit. You got to, this is part of it. Sorry, not the deposit. You got to just make sure that you can actually qualify for the home. You can qualify for that price range. And then you get your selection process where you check in like, hey, what do you want? Do you want a corner lot? You want a premium lot? You want an elevation? What do you want? So you get to choose what home you want, where you want it in the community. And then you write up the contract. So the contract is just writing up basically everything from the sales price, the terms, and the deposit. So these builders will, typically, and you talk about upfront costs. These builders don't play with their deposits. Typically you'll get like 1 to 2 or 3% when it resell. But the builders, you got to put about 10%. I had somebody put down a deposit of like 85,000. So they don't mess around. And so another reason why you want a realtor is because they'll do everything they can to keep that deposit. So you make sure you get your so that's part of the contract writer process. Okay, yeah, Michelle, yeah, that was a foot. So yeah, so tell me which one does apply. You can feel free to answer or not, but or just think about it. Which question does apply for you? What's the big obstacle for you? And then you're under agreement. This is an under agreement mortgage. The whole thing, the whole gamut. The design center, inspections, loan application, appraisal, everything, and then you close. And that's a really great day. So so what is so we talked about house earlier, you know what I mean? And this is what I do is I help people. I help people get into homes, I help people sell homes, and I help people make sure that they're not losing money, that they're not giving up a whole bunch of money, that they don't have to give. That's my job, is to advocate for you, and also to sales. Like, I'm telling you something. Sales reps have it's like Jekyll and Hyde. You know what I mean? Dr. Jekyll and Mr. Hyde, man. They're Dr. Jekyll, you know what I mean? Right before you sign it, oh man, this home is great. It'd be great for you to, can you imagine your kids here and da 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 da. And then when you sign the deposit, man, it's like they'll it's like new number, who this? And so my job is to keep haranguing them and just keep harassing them, and make sure that they don't take the foot off the gas for your home, because they might be moving on to the next one, but we are staying on this one. So my job is to make sure that they don't forget you, that they keep you a priority. And if you're not a priority, I will make sure what's going on, and I will make sure that they find out. So we just closed a place out in July. Sales rep was he started going like this, and we got the regional manager on the line. Hey, look, you got this 1-star review coming for you right about now. You can decide how you want to play this. That's how we played it. So that's my job. We have a mortgage team as well. We got title services. We have preferred vendors, insurance, and inspectors. And that's what we can do for you. But when you do new construction, mainly, you a lot of these incentives, do hang upon you working with their in-house services, mortgage and title, and that's fine, but we're here still as consultants. So I remember I've had a bunch of times where have mortgage questions and title questions that come up, even though my buyers were using their services. I still ask our team, and we're able to give you information so you can make the most informed decision for yourself, so you don't end up being screwed somehow. So that's what we do. Also got local connections. We negotiate. You got industry connections. A friend Anita was able to get a friend of mine into. She's licensed up in Maryland. She was able to get us get a friend into a DR Horton in Clinton, and that came by her knowing the sales manager, you know what I mean, and making that phone call, right? So, like, in whatever industry you're in, whatever you do for work, and whatever you do in your daily life, it's all about the people that you know. That's how you get in. And so we make sure that we want to use all our industry connections, especially new construction, so that you got as many opportunities as humanly possible. So getting into finances, I'm a realtor. I'm not a lender. I wish I had my lender with me. I could ask ChatGPT, but we don't know how that goes. Basics are credit, income, and assets. And before I get into this thing, y'all got any questions? If you got a question, go ahead and type it in the chat. I'll keep talking, but I'll get to your question as I'm going. But don't worry about it. If you got it, you can kind of put a tab on it, and I'll get it to the end. But I know I'm talking a whole lot, so go ahead and just ask a question. If you got it, I'll take care of it, or just hold it to the end. So with new construction, same as resale, credit, income, and assets. Credit, income, and assets. So you got your credit history, your income, your job, whatever you got, whether it's a W-2 or your contracting, sole proprietor, S corp, whatever, and your assets. Everything that is brokerage accounts, rentals, all that kind of stuff. So your credit score. Here's the thing about your credit score, man. It's super easy to get that thing up. If it's low, it's easy to get that thing up. But a credit score is a bank's ranking system for how likely is this person going to pay a loan. You could be a great guy. You could be a great gal. But a bank ain't gonna, that's not gonna give a bank any kind of peace of mind. You know, think of it this way. If you had 5 people that wanted to borrow $600,000, how would you go about figuring out who to give that money to, right? So if you think, even if you're putting out a small down payment or whatever it may be for to buy a house, you're taking out a whole lot of money. You're borrowing a whole lot of money that you got to be responsible for. So that's why a credit score gives a bank like a bit of a barometer for, the ability of somebody to pay the loan back. That's really all they care about. All banks care about is that you will pay the loan back. They just want that money back. That's really all it is. So that's what a credit score does. Your credit score is made up of a whole bunch of stuff, but basic is like this. If it's low, you can get that thing up super easy by just making on-time payments. You've got on time, you've got late, and you've got missed. Just don't miss them, right? On time, late, missed. Don't miss this. You see what finger this is? Because that's what's going to happen if you keep missing them payments. Don't miss the payments. Even if it's late, go ahead and just make it before you miss it. 30% of your credit score is made up of just literally paying on time. And then another 30% is credit utilization. Basically, don't run up your balance, or at least pay it off. If you can make your payments on time and keep a low balance, that takes care of 60% of your credit score. You hear what I'm saying? 60% of your credit score is just those two things. And that's going to help you get that thing up super fast. So, and we always know that the higher the score, the better. You got your income, your 2-year job history, or your whether it's W-2s or tax returns, actually, and tax returns. You don't need to have the same job for 2 years. You can move around, just don't be switching industries like crazy. Don't come up in here, you're a data scientist one day, and then, you're a ballerina, on Broadway. And then after that, you're working in PR, for the White House. I mean, don't be doing that. Stay consistent. Stay consistent. And even if you have done that, and you have gaps in your employment history, just go ahead and be able to explain them. You might be working with a bank, but you're also working with a loan officer. You're working with another human being, and that human being is hopefully working in your best interest to make your financial picture as attractive as possible for you to be a great borrower. And just like, we want to have stability when we buy homes, right? Like, we get into homeownership a lot of times because we want to, you're not going to move again anytime soon. You can paint your home, without having to worry about the landlord saying, your deposit, this, blah, blah. You don't have to worry about pets. You love stability, right? Same thing with the lender. They want stability. You want it. They want it. We all want it. So if you can show them that, it improves the chances a whole lot. And then you got your assets. You got stock accounts, 401ks, 403bs, mutual funds, gift funds. You can't use credit cards. There are some places that I don't know if any builders do it, but they were using crypto. I think it was United Wholesale Mortgage. They were doing it for a little bit, I think. But for the most part, just think about it. Look, make sure it's liquid. Make sure it's liquid. Make sure it's you've got as long as it's some kind of cash, you should be fine. You want to document the money, so no mattress money is going to work. At least make sure that it's in the bank for like 60 days, because a bank lender is most likely only going to ask for 60 days of bank statements. So if you got mattress money right now, it's okay. Just make sure you buy a home. Make sure you start applying for that loan in 2 months and a day, in 61 days, because at least that they'll say, hey, that money's been in there, you good. Gift funds, just make sure that that can be tracked from the person that's giving you the money. Spouses do qualify as family, so you can do that. I had a friend out in Connecticut. They wanted to buy a home. Wife didn't qualify because of tax, whatever, because she was 1099. So I was like, look, let the husband, let him do the thing, let him get on the papers, and then just give him the money. So that way, all she's got to do is just gift him the money. It's just a gift. So, they got the money. So just get qualified without you. If you can do it, great. Then just give them the money and you set. So you got your assets there. So, we got new construction. They got the perks, right? When you buy new construction, the land is owned by the builder. So in that case, you don't really need to worry about construction loans so much. You can come with, and you also don't have to bring 20% down. You can come 10%. You can also utilize USDA loans, VA loans, come zero down. You also have rate buy downs. This is what really got new construction on the map beginning of this year, was especially the 2-1 buy down. What this means is when you do a 2-1 buy down, the interest rate for the first year is 2 percentage points lower than the market rate. So right now it's 7%, so you basically come in at 5%. And then the second year, it's 1% lower than market rate. And then on year 3, it just goes to the market rate. It's essentially like an adjustable rate mortgage. Now, one other thing they do is builders also give you, typically give you incentives like in closing cost credits. You can use these to buy down your rate. Now you're going to get a whole lot of money. Sometimes people will get like $30,000, $40,000. And what you can do is you can actually use that money and buy down your interest rate by like a bunch of points. It takes about half a percentage point of the 0.5% of the loan amount to buy down one percentage point. Sorry, no, it's about 1%. 1% of the loan value. That's the cost of buying down your rate. And let me tell you this: if you have a choice between paying off the closing costs, like the cash to close, or buying down your interest rate, buy down your interest rate. Because then so a lot of we talk about upfront costs, right? The crazy thing is that if you get new construction, if you go new construction, you're going to buy at the top of the price point, right? But if you buy down your interest rate by like 2 percentage points or whatever the amount is, you'll have a mortgage payment that could be comparable to what people would get in resale for smaller homes, for cheaper homes. That's wild. So, and the reason why too is because these are fixed rate loans. So your interest rate is not going to change. Your monthly payment is not going to change. So if you have the chance to buy down your rate, buy down your rate. Okay. Another thing too that I didn't put it over here. Let me see if it's on the next one. It's not on this one up, but another thing too you want to do is get a rate lock. What happened when the interest rates shot up like they just took a pill of Viagra? Is a lot of folks who Cialis, right? So a lot of folks who qualified for loans, who are in process or whatever, they qualify at 4%, but they can't qualify at 7%. So a lot of people just they voided. Let me tell you something. When they voided that contract, they lost that deposit. Yes, indeed. That 10% deposit, gone, right? So you want to get that rate lock. It's about 0.5 percentage point of the loan value. Get that rate lock. Lock that thing for 360 days. That way you don't have to worry about it. Let's say you lock your rate and somehow it goes down. The market rate goes down, and now you have a rate that's higher than the market rate. Own that home for 6 months and refinance. You're gonna be straight. So go ahead and lock that rate. So you got the contract right up, and you're gonna be writing that thing up. The price is set, but the incentives can be negotiated. This is where you're getting all the credits, and then you begin your selections with the structural options. So you have your lot premiums, your connectivity. Look, if you have the option, get Wi-Fi all through your house. And I tell you what, these are what the things that you really want to spend a lot of money on, are making sure that your home is just freaking amazing in terms of its connectivity, the electrical, the plumbing, in terms of its structure. Because when ish hits the fan, this, not your countertops, are going to be the big culprits, and they're going to be much harder to fix. So go ahead and get your connectivity and your plumbing and make sure they're really good quality. They may not talk about insulation, but go ahead and ask for, I think it's I don't know, R19, I think it is. Go ahead and ask for the higher grade insulation, because it will help with soundproofing your walls when after, because, and this is an issue, just I mean you just it's going to be harder to try and do after the fact. Um, so you're under agreement. You got your deposit, your loan application, your inspections. You've got groundbreaking, which is always super great and also very underwhelming, because all you're doing is watching an excavator dig up like the first the first patch of dirt. So you've got groundbreaking, you got drywall, pre-drywall inspection. Pro tip: get an inspector at the pre-drywall, because builders will cut corners. They will cut corners. Now they're not bad people, but they will cut some corners because they got some profit margins they got to meet. They will try to meet those profit margins, and make sure they get a house that will not get them sued. Those are the priorities. So get an inspector at the pre-drywall. He's going to be able to, he or she going to be able to look at the home and see, hey, this is the fix this, don't fix this. You got your you got your pre-drywall, you got your drywall inspection. You get to see like it's just drywalls up. And then you can get a private inspection when everything is essentially completed 90%, and you have the utilities on. So you want to go ahead and get that private inspection. The inspectors, now these builders are like don't really like realtors. Sometimes they also don't like inspectors because we don't let them off the hook. So an inspector is not going to let them off the hook. They're not going to fix everything, but at least a lot of things that an inspector can point out are things that builders sometimes miss just because of all the information and all the stuff they have to keep in mind. So if it has to do with the house that you asked for, if you're not getting the house that you asked for and it's on the report, they're more unlikely to work with you to fix it. Then you have your blue tape, your final walkthrough. This is where you go in literally with a roll of blue tape and you just mark all the cosmetic imperfections around the house. Usually paint chips from moving things in and out. Paint is broken. A door, they got a crappy door. The cabinets don't have the soft the rubber stops to close properly. The windows are dirty. Just stuff like that. They fix all of that. And then also you want to ask them about delays. Remember I talked about why you want a realtor, because you got this contract that is very one-sided. Builder contracts it's almost funny how one-sided it is. But you want to, and they really do protect themselves against delays. They're like, hey, look, this thing might be delayed, so don't sue us, basically. So you want somebody to help you read the contract and figure out some of these delays, some of these ways that you want to make sure that you don't lose your money, you don't end up kind of stuck in a situation that is no bueno. You got your closing costs, you got your insurance, your taxes, and your fees. One thing you want to get with the builder on is how they are assessing your taxes. Some people will have their taxes assessed on the land and not on the property, and that will screw you up really bad. So make sure they're taxing you on the land and also the property, or at least 90 or 80, whatever percent of the sale price, so you have a more accurate picture of how much of what your taxes will be. Because the last thing you want to do is get taxed on land and you have like a tax payment that's like absurdly low, and you feel great until one day that thing is assessed for the property and you have no money in escrow, and you will be SOL. So make sure you get that squared away. And then you got settlement day. Hallelujah, holla back. You know what I mean? The way that I do it is we'll do a final walkthrough of the house in the morning and close in the afternoon. Wire that money the day before, and don't close on a Monday. Do it on a Tuesday. Okay? I'm gonna just tell you that. You don't want problems. Ain't nobody working on Sunday. So all the problems from Friday afternoon are all going to be piled in on Monday. You don't want to be on a long list. So get in on Friday or any day that's not Monday. We'll go in the morning, take a look, make sure they've got the blue tape out the way. And then you also you'll see some of the items that they have on their inspection list that are that go past closing, but they're still on the list. You got a builder warranty as well, which helps you. So you talk with the site manager about that, and then we close in the afternoon. You sign your papers, and you are free to go, and you close on your home. That's it. Super easy. You get a key. Cool thing about the key is um, the builder has a master key to every single house, and they go in and out like with no consent because they own everything until you buy it. So, but the key that you get once you open it one time, that key resets the lock, and that you are the only person that has access to that house. Super cool. So that's the process, guys. I did talk a whole bunch. Next steps, set an appointment. Like I said, I'm here in Virginia, but all of y'all are coming from Jersey, from Maryland, Baltimore, Denver, y'all, Orlando. Y'all are coming from everywhere. Let me say anything. DC, where else? Pennsylvania. Guys, y'all come from everywhere. Um, uh, uh, Oliver's from Burkina Faso. Come on now. Affordability here returns. What's the going credit scores needed? Credit scores, just make sure you're up at 6. You can get. I mean, you can 680 is like super. Like I would be pushing it, but you can come in at that part around 680, but definitely want to be as close to 700 as possible. There will be a recording, Tony. There will be a recording, man. There will be a recording. That's going to happen. But like I said, guys, how do you get new construction without HOA? I mean, just find it. That a lot of new construction communities they'll advertise about not having HOAs. So go ahead and do that. My mother-in-law, they built a place out in where is it? In New Hampshire. That's new construction, no HOA. So they'll advertise them like that. But everyone wants no HOAs, and so just make sure you get early. Make sure you get in. If you're in the first round, go ahead and get in. One thing about new construction is our rates the same for new build. They can be a little bit higher, if you're doing a construction loan. But if you're just coming in, like big builder, they're not. They're basically the same as everybody else. But what you can do, Lisbeth, is with the builder incentives, you can buy your rate down pretty aggressively. So figure out what the incentives are. Honestly, like if you just walk in with and just ask a sales rep, what are your incentives? They'll literally tell you, like it's literally on a piece of paper, right? So they'll tell you what the amount is, and then you can work with them to buy down your interest rate. Mark, good DTI percentage. You want to be somewhere around, like if you're doing a VA loan. If you're doing a VA loan, you can go up pretty high, but you don't want to do that just out of fiscal responsibility. So I would say around like 30, 40% is I would say, get up in that. Now it depends also on the loan that you're getting. If you're getting a conventional loan, you want that thing to be pretty low. But a conventional loan is not going to, I doubt you're going to get a conventional loan at 40%, but you can get a VA loan at 40%. How do I know when to sell my current home during the new build? Douglas, that's a great question. This actually is I was talking about my buyer who that the high dollar one, they had to sell their house. So here's the ideal scenario for you. Obviously, use Newfound, save 50% on commissions, and you get a whole bunch more equity, right? What they did is they sold their home and they moved into a short-term rental. The great thing about that is that you secure housing for yourself in the event that you move. Because let's say you want to coincide your home to close, right around the time that your home is completed, and you have a delay, and you can't get a rent back. Well, you're going to have to get like a very expensive Airbnb. So I would say that you want to sell it early, and make sure that you close with, if you need the money from selling the home to build, make sure that you have enough money from selling, and then get in a short-term rental and just kind of ride the wave until you close. with this buyer, they ended up selling their home. I mean, they signed the contract, sent the deposit, and I think they sold their home like a month and a half later. And then they just moved into a new construction that was a short term that was right near their kids' school. Actually, it was right in the same neighborhood. It was pretty close to it. And they just rode the wave. They were month to month, so they had no pressure, and it was a great situation where they actually did have a delay, um, but a very minor delay. But also, but they had they closed and they knew they had all the money. They had a rate lock as well, and they took the incentives. And from route like 6 months in, money wise, they knew they were good. So I would say sell it early, do a short term rental, um, get all the money in hand, and just ride the wave, man. So that's what I would say. Um, so this QR code here, you guys can go ahead and scan it here, or you've got my you've got you got a calendar that came up. You can go ahead and schedule something there. I'm in Virginia, so I can hook you up here. I also have my colleagues in Maryland and DC. Go ahead and get up in there. We can help you there. And definitely I trust them. Anita, who's out in Maryland, Virginia, and DC, she helped my friends out in Clinton, and they got a sweet deal. They had a really big hiccup, but they got a sweet deal, and they closed, with just one delay, and she just worked it all out. So we can help you wherever you're at. But any questions you guys have, go ahead and throw them a good DTI. I talked about that. The rates are the same. Did I miss any questions? Let me just go ahead and scroll through the chat. So Tina you're wondering if it's better than buying not new. So here's the thing that I'd say, DeAndre. Okay, all right, brother. Here's the thing I would say about it. So check this out. Let's say you do resale, right? A lot of people will go resale. Any price point you think of, you're going to be going into a multiple offer bidding war. Any price point. So let's say you're going to new construction and it's let's say 500,000, right? If you're bidding with 5 other people, you're most likely going to end up at like 550, right? And you're going to have to get that loan all by. You're not going to have any credits to buy down a rate, right? So as far as is it better or is to go new construction or not? New construction offers people a peace of mind. That you can walk in. Maybe if you don't care about a lot premium, you're gonna get in. You like what you see, you get it. You sign the contract right there. It's yours. You know, and then also you can buy down your interest rate, and you get a market rate up front, and then you just buy that thing down. You have a lower interest rate than everybody else, and your monthly payment is smaller, even though your home might be more expensive, right? So and it depends. But if you're cool to ride it out, and and let's say you want to if you're the places you want to live are if the places you want to live are in your preferred area, and like new construction is outside of your preferred area, if there is a good reason for you to move out of where your preferred areas you want to live, then go ahead and do it, because you're going to be in a really great financial situation, and you're also not going to have to worry about fighting everybody for a house every weekend. But if you really need to be in a specific location for a specific reason, then just make sure you understand what the market is giving you in those areas, understand how fast homes are selling in that area, understand homes are there's this thing called a sale price to list price ratio. You want to know what that is in your area. If it's plus anything, then that homes are selling above list price. And if that's an average, you then can bet, like let's say the average sell price list price ratio is like 5%. Then that if it's 5%, then you can bet that like the most competitive places are probably going like 10%, 8%, right? And that's not to deter you. It's just so you know what you're getting yourself into. That's one way that you can figure it out, because that's going to give you a chance to know, like, okay, how long am I have to gonna be putting in offers and all that. Okay, how long to wait to apply for a loan after bringing up your credit? So, Shawnee, what I would say is, the thing about lenders is that you can shop around for forever if you wanted to. What I would say is this: if you really want to, work on this thing, get on this QR code. We'll talk with the lender. So since we have, like I mentioned, as a buying team, it's a team out here. We're all salaried people. Like, I have no stake in this thing. I'm not getting a kickback. I'm not getting any kind of referral fee. We're all on the same team here. I'm eating. I'm good. Um, we can figure out, like, okay, where are you at with your credit score right now, and then you know how where do you need to end up, because it's not even so much about applying for a loan. You need to find a house first. So it's more about when should you get your house, right? And that can be as soon as you get, as soon as can get a hard credit pull and you're good, then I mean, there's nothing stopping you. But go ahead and hit that QR code and find somebody that can help you in the mortgage team, and they'll give you a roadmap, literally from wherever you are right now. They'll give you a roadmap. Hey, this is where you need to be. This is what you need to do. A lot of people that I worked with over the last 3 or 4 years, when we start, is the big thing is, like, one major credit card they got to pay off. They got some medical collections that they know about that they have to pay off. You know, it's things like, once you get in, they give you a roadmap of, like, what to tackle, and so that so kind of a time, because then it depends on you, like, how fast can you clear things off. Um, so that's what I would say. Down payment minimum for new build 10%. Yes. So there is a 10%. So it depends if you're gonna go zero down on a VA loan. If you're doing a big builder that they own the land and everything, then you don't have to go super high. You can go, but 10% down payment is always attractive. Um, Here's the thing about down payments, and this is what I really really want to uh, make clear. Um, the lower the down payment you have, the higher the monthly payment that you have. Okay, so just keep that in mind. So if and just even so, why 10%? Is the builder that I'm interested in wants to use their own inside lender to be qualified for the incentives? Yes, that's correct. That's typically how it goes. So Michelda, I hope I'm saying that right. My advice is get with a lender. Sorry, get a realtor. Um, if you have a friend who's a lender that can consult with you throughout this process, so that you can use the lender, but then also make sure you have somebody that can help explain things to you so that you don't get burned or whatever. Um, so that's what I would say. So go ahead and, yeah, if you want incentives, you'll most likely have to use a lender and their title services. Go ahead and do it if you want the money. And then just make sure you have consultants to help you figure things out. Okay, guys, I have 1 minute left. I really have had a great time. Thanks, guys, for all your questions. Thanks for hanging with me and listening to me for a whole hour. You listen to me for a whole hour? This is a church out here. Dang, before I close, so I've been closing for a long time. So, but thanks, guys, for hanging with me. Thanks for spending time. I hope this was helpful. Yes, there will be a recording. So you'll go ahead and get a recording. You can go ahead and watch this at your leisure and send it to somebody that you think would benefit. As I mentioned, I'm out here in Virginia. If you are in Denver, I can't help you, brother. But we got people who can. So go ahead and hit that QR code wherever you guys are at. Thank you so much. Really hoping you guys get the home that you want. And I hope you get the home that you want. I hope that you get the process, works out for you and you guys succeed. Okay. I got to roll. I need to figure out how to close this thing first. But anyways, I got to roll. Thanks, guys. It's been super fun. And until next time, y'all take care.